Knowing the money game is absolutely critical. You have the fixed money game, you have the variable money game, and then you have the indexed money game. I'm going to give brief examples of all three, and I'm going to share with you how I transition to understanding the money game and operating more like the banks. So the normal everyday person, the reason why they stay in the just over broke system, trading time for money and barely making it a retirement, is they play the fixed money game. The fixed money game is where you take your money and you put it into a bank and use things like savings accounts, CDs, the normal traditional stuff that our parents and grandparents did. The next is variable. Things like cryptocurrency, stock market, things that can go up and down and are very volatile. And then you have indexed. The first one, fixed, is your tax now for the interest that you gain on those accounts. It's the poor man and poor woman's way of doing your finances and growing your wealth. So you put your money into a bank, they dam it up with a time account or a savings account, and they take your money and they put it into the variable markets and they index your money. And they make large amounts of wealth off of your money. And they pay you a small percentage on your fixed account. And you have to pay taxes now on that. That's earned income. Then there's variable, as we talked about. Variable is things like the stock market, crypto, just to keep it simple, or things that go up and down, right? They go up and down. And you're taxed later when you pull your gains. So you're not taxed until you actually realize those gains. You'll have short-term capital gains and long-term capital gains. And then you have indexed. The most common and most popular thing that people are talking about, I use IUL, Index Universal Life. People call it infinity banking. They're insurance plans that gain cash value. Index means it's indexed to the market. It gets market-like returns, but it's not fully attached to the market. And those are tax benefits. There's tax benefits to those. So here's how you transition from a poor mindset to a wealthy mindset. So you use your bank account as a transaction account. You don't dam your money up in a bank account so they can use it in the variable market and the index market to make money off your money. You operate like the bank. You use your fixed account, your bank account, your checking account, and you transact with it. You pay your bills, and then you take any excess money and you invest in yourself. Don't put it into a savings account or a CD. Take that money and put it into the variable markets, but only invest what you can afford to lose. When you put that stuff in the variable markets, cryptocurrency, stock market, create an exit strategy. So when you profit, you can pull profits. Now realize you will be taxed on that, either short-term or long-term capital gains. But then when you take those profits, especially during crypto right now, going into the bull run next year, you're going to have a large amount of profits. You take that and you lock it up to index accounts like I do. You can use things like IUL that have cash value to it, that you can use during your living years, unlike 401ks that are variable, and they penalize the shit out of you if you use it during your living years. You can also borrow against yourself. You're your own bank. So just like the fixed account you were using, the bank account, you're putting your money in a savings account, they're putting it into variable and fixed, and then you have to get a loan, and they're taking someone else's money in the fixed account and giving you a loan and making more money. So let's recap that. The wealthy strategy is using a bank account as a transitory account. Pay your bills, do your transactions, and then take your extra money and you put it into the variable markets. And you create an investment strategy. And you understand when your money's going up and going down. And to keep it simple, buy when people are fearful and sell when people are greedy. That's simple. When you sell when people are greedy, secure your wealth. You can put it in an IUL policy. Guaranteed principal. It's indexed to the market. It's not in the market. It may not have as large a gain as the market, but it also has a zero principal. You can't lose your principal, zero floor. But when the stock market comes collapsing down, your 401k collapses. You can also borrow against your own policy if you need to access capital. Tax-free. And at the end of your life, when you're supposed to be retiring, sitting on a beach, relaxing, drinking some Mai Tais, you get tax-free retirement. Unlike the 401k, they tax you on the back end. So it's just about changing your brain from a fixed person around wealth to understanding variable and how to index your wealth, secure it, grow it, and become your own banker. Warriors, rise! Get your shit together. Love you guys.